Good afternoon and thanks for joining us. I'm Holly and you're watching Kalkine TV live from Sydney. Let's check out the overall Australian ASX 200 performance for the day and explore the gainers and losers and trending updates from the global markets and cryptocurrency sphere all on the last trade. Now we know a myriad of speculation is impacting the share markets worldwide at the moment. Will power, coal and gas shortages in China through the rest of the year stoke more volatility into the base metal markets? Aluminium's soaring value helped the ASX-listed alumina hit a 52-week high. Will other stocks follow suit? And will the upcoming run of annual general meetings bring in hope or disappointment as lockdowns, supply chain pressure and the prospect of a tight labour market weigh on company profits? All will be answered in this edition of The Last Trade. But first, back to the local bourse's performance today. The ASX 200 traded lower, dropping 0.26%. Over the last 5 days, the index has gained 0.45% and is currently 4.6% off its 52-week high. The sectors remained mixed, with 11 sectors trading lower. Healthcare was the best performer, gaining 1.12% and 1% over the past 5 days. Meanwhile, the energy sector remained relatively flat today, taking a breather after rising sharply over the last 3 weeks. The top performer on the ASX pack was metals and electronics recycling company Sims, up a staggering 4.7%. Another material company, Alumina, saw its shares rising by over 4%, as did IDP Education, up 3.7%. Plus, diversified financial groups Hub24 and Netwealth Group rose 3.8% and 3% each. On the flip side though, Ansell was the biggest laggard on the ASX today. Its stock plummeted 4.5%. Corporate travel management and Appen were down as well, over 3% each. And Zip saw its shares fall by 3.4%, and Ria Group as well dropped 3.3%. All this as the shares of pharmaceuticals, biotech and life sciences company CSL rose nearly 2% after an AGM session. mRNA vaccines and executive pay were the front of mind for investors. The business is looking at the long-term opportunities of the tech and is anxiously and actively doing work on an mRNA flu vaccine product with trials to start next year. Plus, the biotech giant will mandate vaccination against COVID-19 for all workers at its Australian sites, as well as its US counterparts. Meanwhile, banking giant Westpac shared that its second half profit will take a $1.3 billion hit, mainly due to hefty write-downs from its institutional banking arm. On top of that, ultra-low interest rates are set to take a toll on earnings. Final results will be delivered to the market by early November. And shares plummeted nearly 2% today as well. Another major bank, one of the big fours, Commonwealth Bank, has wrapped up a 3-year push to enhance its governance and culture by implementing the recommendations of a prudential inquiry into the bank from 2018. CommBank published the final reports in a remedial action plan and said that all milestones that it had been set following the review had been assessed as complete and effective, and all of its recommendations had been implemented as well. With that said, it's time now for a short break, but stay tuned because I'll be right back with more trending market updates.
Property by Kalkine. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest slowdown in the property market, tune in on Kalkine TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with Kalkine.
Hello and welcome back to the Market Close Commentary. You're watching The Last Trade. Let's have a look now at investor attention. A slight upsurge was noted in the shares of BKI Investment Company, as the investment company said it is confident of increasing dividends in the 2021 to 22 period. The fund received about $30 million in dividends from its recent reporting session and expects to receive a further $20 million in special dividend income. Plenty Group shares zoomed by over 6% after the consumer lender reported an 18% increase in loan originations quarter on quarter and a 140% increase on the September quarter of 2020. Notably, the loan portfolio increased 21% in the 3 months to 30th of September, up $915 million. And AMP announced that 2 external hires have been appointed to run the wealth giant's private markets business. That'll be spun off and listed on the ASX under a new branding. Former Suncorp Chief Executive Patrick Snowball has been appointed chair, and former Deutsche Asset Management Australia Chief Executive Andrew Fay has been appointed deputy chair. AMP shares traded in the green zone today and were up by nearly 1%. And onto the new listings front, the wholly owned subsidiary of Liontown Resources Minerals 260 shares commenced trading on the local bourse today following the completion of its oversubscribed initial public offering, which raised $30 million. The company may begin a 6,000-metre diamond core reverse circulation drilling campaign later this month at its key projects, the Mora and Kujin joint venture projects. Well, now that we know the stats back home, let's move on now to the global market performance. And the global forecast for the Asian markets remain gloomy, with interest rates concerns offset by a support from crude oil prices. European markets have been mostly higher and the US bourses are down. One could say that the Asian markets are having a hard time figuring out the difference. In the latest trading session, MSCI's Asia Pacific Index snapped a 3-day climb, with the tech sector leading the losses and South Korea underperforming. Meanwhile, Japan's Topix Index lost 0.6% and the Kospi declined 1.4%. Hong Kong's Hang Seng Index shed a similar 1.1%, while China's Shanghai Composite Index fell at 1%. Global markets are struggling to shake off worries that inflation spurred by an energy crunch and pandemic-related supply chain shortages will snap company profits and economic expansion. On top of all of this, the debt crisis at China Evergrande Group continues to simmer. And we are now in the last segment of the show. Let's have a quick look at the buzzing crypto market performance. Well, in the crypto world, a rally in Bitcoin paused at about $57,000. The overall crypto rally seems remarkable since it occurred in the face of a broader risk-off environment in both equities and bonds, with the crypto markets seemingly decoupling from the equity markets. At the moment, bullish sentiment continues to grow after Bitcoin's price broke above the $57,000 mark. Experts foresee a continued rise and some are calling for a return to the all-time high near the $63,000 level this quarter. Plus, crypto-focused funds took in more than double the amount of new money last week, propelled by Bitcoin-focused funds wherein inflows rose to $225 million. The highest in 5 months. Well, before we wrap up, here's another update for you. KISS bassist Gene Simmons and his $300,000 Cardano investment has more than doubled since February. Seems like the world of digital currencies is paying off handsomely for that musician. Well, with that said, that is a wrap for now, guys, but I hope you found the market close commentary informative. We're back tomorrow live from Sydney at 9:30 a.m. in the morning with our first report on the pre-market scene. Take care and stay safe. Holly Shield signing off.